Hello everyone, the chart guys have been working on an introductory technical analysis course for some time now, and after surveying hundreds of traders, we narrowed down what the most sought after information was, and we created this course, Entry and Exit Strategies. It's over 5 hours in length, and we go over different signals that the charts tell us for when to buy and when to sell. If you are the kind of trader that is still looking at charts and not realizing what it is trying to tell you, still feeling a little bit overwhelmed, this course is designed to alleviate that uncertainty. So the course outline, we're going to go over the psychology of trading, establishing a game plan, recognizing the different indicators signaling bullish and bearish entries, being able to identify support and resistance levels, poor entries where traders make mistakes and how to avoid them, exit target, knowing where to sell your positions, where to place stop losses to keep those losses minimal, my personal preparations, how I get ready for the trading day, and then piecing it all together, looking back at everything we just learned and applying it to the real world. As a bonus, we'll also look at an intro to finding entries and exits with patterns, and you'll recognize these patterns on all kinds of time frames throughout the stock world, so certainly beneficial to be able to trade off of those as well. So we hope you will check out this course, and again, we feel it will build a foundation of technical analysis knowledge that experience will build off of and send you on the right direction to making more profitable trades. Hey everyone, checking in on SPY daily weekly time frame. So a bearish reaction to the Fed, and not so much that they're raising rates announced, but that 2017 we're looking at a potential 3 times raising of rates. So bears saw a pullback, but on the grand scheme of things, daily chart, the bulls are absolutely still in control. It was high bear volume with all the volatility back and forth. But as long as we form a higher low on this pullback compared to this consolidation low of 219.15 from the 1st of December, it's still a higher low on the daily time frame. We could pull all the way back to 220 and still form a higher low. So keep that in mind. Could potentially lose $5, $6 to the downside and still be in a daily uptrend. We still have the middle Bollinger Band support, still have the 8-period exponential support, and at this point, we will just look for this to be normal, healthy consolidation in an uptrend unless we start to see increasing bear volume or other signals that this is more than that. We still have the weekly upper Bollinger Band support. So that shows you just how strong we still are. That level is 225.19, and we did test it. We bounced just above that level today. So it is a bearish reversal candlestick, and we can know pretty much with 2 trading days left that no matter how the rest of this week goes, it will likely be a bearish reversal candlestick by the end of this week. So next week, we could be in for some further consolidation, and if we lose the upper Bollinger Band next week, that will be the case. But again, we're looking down here to 219.15, the low of the last consolidation candlestick. So let's look at some of this trading opportunity today, and once the Fed hit at 2 p.m., certainly that's when all the volatility began. So I was watching it on the 2-minute time frame to be able to capture all that volatility a bit better. And we had the initial bearish reaction, and then a bullish reaction, and a move close to the all-time high. We came 13 cents shy of that all-time high. So lots of volatility. We know knee-jerk reactions are common. So we were waiting for a break of the tightening pattern after we reach a bit of an equilibrium, and this is the market digesting everything. And we have the high, the pullback low was 227.51, then a lower high, higher low, tightening range, and as soon as we broke 227.51, we had a lower high and a lower low from the initial high on the reaction. So this candlestick right here was your indication that the bears were taking over. It was on increasing bearish volume. We broke the low of the initial pullback, so we not only saw a lower high, but now we have a lower low, and then we saw further increasing bear volume, short-term bounce attempt rejected from exponential resistance, and then if we zoom out, the bears were in control the vast majority for the rest of the day, as we just set lower highs and lower lows. And even this bounce right here, I was on at the end of the day, and we had a resistance level here of 227.23, the high of the bounce, pulled back, nice bounce at the end of the day, but we were topping out, and it's a potential top fishing play where you would make a bearish entry and you would exit if 227.23 broke for the bulls, and that would have given a nice $1.50, $1.40 to the downside in the final 2, 4, 6, 8, 10 minutes of the day, 15 minutes. So really nice little bear entry opportunity there, but overall, the signal to go bearish was back here as soon as the initial low from the initial reaction was broken. So on the hourly time frame, a key support to be watching into tomorrow is the 100 period. And let's pull up the hourly here. Every low today tested that 100 period moving average support and held it. We have an inside candlestick on the hourly time frame to be watching, but the range is getting tighter and tighter, and where we stand relative to this 100 period or hourly moving average will be very telling tomorrow. If we lose it first thing, we know further downside is coming, and we'll be looking down to the 200-hour moving average support down in the low 223s. So bulls very much in control of the daily time frame, bears very much in control of the shorter term time frame, and we'll see what we get tomorrow. The weakness in the close has me thinking that we will at least be testing the lows of 225.37, which lines up close to the upper Bollinger Band weekly support. So certainly lots of volatility, trading opportunity, and action, and we'll check back in tomorrow. See you then.